Are we on our way back to $100 per barrel oil? We are asking the guy who called those record prices back in the summer of 2008. Francisco Blanch is the head of commodities research at Bank of America Merrill Lynch. He is joining us now from his office in London. Francisco, always glad to speak with you. Thanks so much for joining us this morning. You say we could see the range 65 to 105. Is that by year's end?
Well, I think 105 probably early next year. I think we could see prices breaking through 100 in early 2011. I do see prices probably heading into the 90s in the second half of the year.
What do you think the main driver is, Francisco?
Look, I think the main driver is demand. I think we're seeing a recovery in global demand for fuels. We're seeing a recovery in manufacturing. We're seeing a recovery in GDP, economic activity. Employment numbers are looking better everywhere. So I think that just sheer demand is gonna push prices just a little bit higher. Remember, we still have spare capacity this time around, so it's not as bad as it was back in 2008.
So Francisco, when you talk about demand and the global economy improving, do you see, if you had to put it in relative terms, more demand for the U.S., or are we still talking about the growth engines of China and India?
Well, this is actually quite interesting because in the past 12 months we've seen the emerging economies leading demand for oil in quite a sharp fashion. But now we're starting to see the U.S. increasing demand for fuels quite rapidly. We've seen U.S. demand up roughly 600,000 barrels a day, or 3.5% year on year in the last few weeks. So I think it's a recovery that many people weren't really quite expecting. And remember, you also have Canada, which is doing quite well. You have some other OECD economies, Australia, Japan also doing okay, and soon to join, we hope, is going to be the Eurozone with an impending recovery. So I think we're seeing broad-based demand recovery across different parts of the world.
How much power then is OPEC going to have this year and next year as prices get that high?
Look, I think OPEC still has a fair amount of power. Compliance rates are back down to 50%, so we've seen a big drop in compliance. But again, they still have spare capacity. They still have about 5 million barrels a day plus of spare capacity that they can bring into the market. To give you a sense, that's roughly 6% of global demand. So we do have some cushion over the next, I would say, 24 months. So I'm not too worried about a super spike here. I think that OPEC will come up. If we get to $90 a barrel, 95, OPEC will come out and throw maybe 500,000 barrels a day or 1 million barrels a day into the market. So I don't think there's going to be a spike yet. There's no clear bottleneck. But if you look 3-4 years out, with this kind of recovery, yeah, you would get into bottlenecks in probably by 2012, 2013.
Francisco, we have about a minute left, but while you expect oil to go higher, you expect natural gas to come lower. Why is that?
Well, natural gas is the mirror image of oil, both from a supply and from a demand standpoint. Natural gas on the supply side is an extremely competitive market. We've seen lots of capital chasing incremental production, particularly in the U.S., shale gas production, as well as LNG in different parts of the world. Oil, on the other hand, is dominated by a cartel, which ultimately has a tight grip on supply. And also from a demand standpoint, gas is also being consumed in countries that have perhaps a weaker economic outlook than others, like the UK, Spain, the US, or Japan, compared to oil being consumed mainly in countries like India, China, and so on. But again, our forecast for gas is $5 per MMBTU on average for the year, which is slightly above the current levels.
Francisco, we thank you as always. Francisco Blanch joining us there from London, Bank of America Merrill Lynch.